Good morning. Thanks very much for joining us. Welcome to the Global Outlook 2021 series, and this one, which is focused particularly on the Netherlands. My name's Richard Betts. I'm the group publisher at Real Asset Media, and we produce magazines, newsletters, as well as run a series of around 60 of these events over the year. During the crisis, we've created lots of new initiatives just to help support communication within the industry, including Realcast, which is a weekly update on the real asset markets, special reports, and of course, these online seminars. We also launched RealX.global as a platform, and I know a number of you are joining from there today, and there's been over 14,000 visitors since September. We've got a super panel for you here today, and so let's start with introductions. Rogier.
I'm Rogier Bos. I'm working for Berlin Hub since 2008 and therefore responsible for the growth we've managed over the past 12 years. We have especially been very active in the office and resi market over the years. Last year, of course, it changed a little bit, but still very active, open for business. Open to contribute to our ESG targets, and well, even today in a silent market, quite busy.
Great, thanks very much. Jeroen.
Yes, I'm Jeroen Gerritsen. I head the Panattoni Dutch office. And we've had quite a successful year last year. We managed to launch over 250,000 square meter of new developments in the Netherlands as we started in December 2019. We had a good year and managed to establish a very experienced team ready to deliver on the next year.
Great, thanks very much. Jordi.
Jordi Diepeveen. I work with Savills since 2017 now. I'm in the investment teams. We have like 20 professionals that work across all sectors. Myself, I focus on buy-side advice for clients in close cooperation with our central investments team in London to basically launch new capital to the Dutch market. And in the Netherlands, we have 130 people across 2 offices in all business lines. Looking very much forward to this discussion. Thanks.
Super, thanks very much. Claudia.
My name is Claudia van Haafden. I'm the founder of Société Vastgoed and Société Vastgoed Academy. Working in the real estate sector for more than 20 years and actually always on the move to encourage professionals to realize business opportunities and strengthen their knowledge. And we're helping professionals to be more successful by generating business opportunities and optimizing their network, talents and network. And we do so with Société Vastgoed. We have over 500 members and even so much partners to participate, like Richard.
Great, thanks very much, Claudia. And thank you also for reminding me of what I'm missing at the moment by not being in Amsterdam. And last but not least, Dennis.
My name is Dennis Waker. I'm part of AEW, a global investment manager, and I'm part of the European investment team. I'm in the research and strategy team in London, which is the research team is split between London and Paris. We have around 10 people right now in the research and strategy team. AEW is a large investment manager. We have numerous funds and separate accounts, and we invest across a wide range of spectrum, logistics, retail offices. We also have debt capabilities. We even have listed capabilities as well.
Just a little bit, Dennis, first from you, in terms of the macro picture, the sort of economic side of things, how are you seeing sort of 2021 at the moment, particularly looking at the Dutch market and I suppose in comparison with the other European markets?
If we look at the graph that I just showed, is that the impact in 2020 was less severe, but the recovery in the Netherlands is expected to be less sharp than in other countries. And this is, of course, due to the fact that the vaccine rollout is slower than in other European countries at the moment. I hope that they will find a way and speed it up, but time will tell. And there's, of course, also a Dutch election next month coming up. So that will also shape the trajectory going forward. But as we see it right now, is really aligned with the graph. It's really a slow recovery in the Netherlands, but we also have to say that the Netherlands is still at the end of 2021 in terms of GDP index on a higher level than many other European countries. So that has to be taken into account as well. If the impact is less severe, it's also much more difficult to grow at a more rapid pace than your peers.
And Claudia, just coming to you, obviously, big focus at the moment in terms of the trends that people are seeing for the, for 2021. Obviously, you'll be seeing that as well through your members and what they're expressing as their views. So I suppose, what are you seeing as some of the key trends coming to you, if you like?
Yeah, well, due to the corona crisis, we see that the number of, in the residential market, the number of inhabitants is increasing less rapidly, especially in cities that had a large influx from abroad pre-corona. And since tourists stayed away due to international travel bans and restrictions, many Airbnb owners have switched to permanent rental or sale of the properties. So expats are often moved away, leaving rental properties in the high segment vacant. And because many Dutch people can hardly afford such rents or often choose to buy a home, prices in this rental segment have fallen. And this has a negative impact on rents in these cities. And we see a mixed picture of prices in the rental market in cities. Actually, everything is related about COVID now, but we see a more varied picture of the rental market in cities where rents were high pre-corona and where expats and tourists flourished. We see now a decline in median rents. Square meter prices have fallen, especially in the higher segment with rents higher than 1,500 euros per month. And in the segment up to 1,500 euros, we still see an increase in rents per square meter per month in most of the cities. And despite the decreases in rent in the cities, the square meter prices per month remain the highest here. Amsterdam is also, of course, the highest square meter prices with rental. We have seen that already in the fourth quarter of 2020. And it's now, also in 21, still like that. So, the housing market is recording records despite the corona crisis and recession, because also the average house price rose to nearly 400,000 euros, almost 12% more than a year ago. So that's on top of mind.
So the residential market booming in essence there in Holland. Okay, interesting. Rogier, let's just come to you in terms of, I suppose, what you're seeing as both key trends, and maybe also just pick up a little bit about what you're expecting to see in terms of the financing market, and feel free to pick up Benelux as well as the Netherlands.
Well, first of all, when it comes to Resi, it is indeed, it has been super hot in December, and we clearly see a slowdown now at the beginning of the year. So I think we can all be positive that this will pick up later on again, because then the effect of the increased transfer tax has disappeared. Secondly, I believe that you can make a distinction between the short-term and long-term effects of this pandemic. Indeed, we do also see that rents in the higher segments are decreasing. We even see some vacancy in the more expensive apartments, which is also not something that we would have expected. But I think it is likely that all these expats will return in the near future. This will come to an end. We are also fairly positive about what is going on. Nevertheless, pointing Dennis at your last, one of your screens, I think on all asset classes, apart from one, we see a yield below 4%. Of course, a lender can become nervous because of such a graphic, because it is low. Things are expensive, and what we are looking for is safe investments. And safe investments in the Netherlands still are apartment buildings and Resi in general. And so that is also where we will keep on focusing on. And on top of that, we will be cherry picking. There are not that many cherries at the moment, so we do more than 50% in Resi these days, and we will continue to do so. And on top of that, indeed, it will be cherry picking. Another trend is going to be that we will see more legal requirements to green buildings. The Netherlands still is, as far as I know, the only country where it is mandatory to have a green label for office buildings in the near future. It is in focus of the EU right now. Indeed, we will have elections right now, so a sustainable building is becoming a must rather than something which is nice to have. And we're also anticipating on that with the development of transformation loans. And that's not the same as what we've seen in the Netherlands, where we have transformed office buildings to apartment buildings. But this is meant to transform brown buildings to green buildings. And I think that is probably one of the more important megatrends in the coming years.
Great. I'm going to drill down a little bit into that later, because I do think that's a really important trend, and often one that's been led, by the Dutch market in some ways, I think. So I'm always interested to get your perspective, because it tends to be ahead of some of the other areas. Jordi, just coming to you in terms of the sectors, we've heard a little bit from Claudia and Rocky there about the residential and some of the sectors. What are you seeing from your view at Savills?
Well, basically what we have seen post-COVID is a reassessment of risk all over Europe. I think it's safe to say that you see a flight to safety. So basically the Northern European countries have been more resilient in terms of investment volumes compared to Southern Europe. But we see also that COVID is an accelerator of ongoing trends. There has been a shift in sectors. If you look at the investment volume, the trend of beds and sheds is really ongoing. The resi sector is last year became the largest sector within the Netherlands and has remained the largest sector this year. The logistics sector has really boomed, growing to over 4 billion of investment volume last year, which was an increase of nearly 40%. And actually, surprisingly enough, the retail investment volume has remained relatively stable, but it was mainly supported by basically convenience retail and also by retail parks, which also flourished during COVID. And if we look at the office sector, the investment volume came down quite dramatically. But if you drill that down, you can see that actually the prime office segment has been quite resilient, quite stable in terms of volume, but also in terms of yields. One could even speak in some cases of some yield compression, but it has been very difficult to do deals when the tenancy is a bit more difficult, vacancy is in place, or the location is maybe too secondary or too regional. And basically those deals didn't pull through because there was a spread between bidding and asking.
Jeroen, obviously big focus there on logistics at Panattoni. And also, we've been reading in the UK press here that there may be a boom for Dutch logistics from Brexit. So I'd be interested to get, first of all, your sort of views on I guess how you're seeing the market at the moment, and particularly the outlook for 2021 for your sector. And also, is that something that you actually have been seeing more of a kind of boom in terms of Dutch logistics, post Brexit, if you like?
Yes, indeed. So I think it's already been going on for 2 years now, ever since the Brexit vote was casted. Already from that moment on, we saw that firms that were based in the UK were looking to the continent to see if they had to split up their business or have two footholds, one in the UK and one on the continent. And then obviously, I mean, since we're the first one across the canal, and we have a major port of entry, they tend to look towards the Netherlands. And I think there's still some good availability here, some good opportunities. So that's also a reason why we hear sometimes from our German colleagues as well that it's getting more difficult to open up new locations, especially in just across the border. Netherlands still has availability, but also that's also becoming more and more difficult, and we can go into that maybe later. But maybe first to answer your question, I think in the end it's all about the fundamentals, and the fundamentals in our sector are that we see a supply chain that was always just in time. So everybody had very little stock, and that was very nice because we didn't have debt capital on the shelf. But if you're a producer of a product that holds 250,000 components and you're missing one, you basically stop. So we see producers tending to hold more supply to cope with that. So that's one fundamental thing that will be changing, and which underpins a bit of the growth in logistics. And then secondly, obviously, e-commerce. I mean, if there were any late adapters, they're gone now. And so everybody's now access to online shopping, online buying, and that trend is just going to keep on going, and that's been a real basis for the growth that we've seen in our sector.
It's going to be really interesting to track that over the year, I think, Jeroen. Dennis, I just wanted to pick up a little bit with you in terms of what you're seeing with the capital flows, and also maybe from that capital, what you're seeing in terms of investor intentions.
That's super interesting, Richard. What we see, and it aligns already with what Jeroen just highlighted with logistics / light industrial. I think that's on top of many investors' list, and also on top of our list of many other things as well. But logistics / light industrial, the fundamentals are really good. But also if you think about like the reshoring, and I think COVID-19 is also accelerating that trend of like increased reshoring together with like a fourth industrial revolution, which probably will increase the demand for light industrial facilities and logistics closer to cities as well, and for all the same reasons as Jeroen also highlighted. So that is, I think, where investors will be looking at. Another thing is what Claudia already highlighted, is that residential is really an interesting flow, and where it was quite a niche kind of sector like 5-6 years ago, I would say it's becoming mainstream, and in the Netherlands it was the highest source of capital actually in 2020, according to the numbers, and also highlighted by Jordi. So those are two of the main like core investments that we see a lot of interest for. And then of course it's the more value add. If you go a bit on the risk spectrum, I would say that value add opportunities might arise as well in this upcoming year. We've done a large report on the debt funding gap, which basically quantifies the refinancing issues that might occur from existing investments where value add plays might benefit from, might not immediately, but later in this year or going into 2022. There might be some very interesting opportunities for those plays as well. I would also say like offices, and I think the panel already made some very good observations on like prime office locations. I think they are still very sought after, and especially because the fundamentals on the Dutch office markets have changed. It was always pretty well known for having very high vacancies after the GFC, but currently we see quite low vacancies, especially in the central business districts. And the office to me is definitely not that. It will reinvent itself and might see a little bit different purposes of more being a place to meet clients, to meet people, etc. Because I'm a big believer of agglomeration benefits, meaning that being close in a close vicinity with each other will generate benefits in terms of innovation, in sharing of knowledge, etc. So I see many opportunities across the board, but it is a bit of cherry picking as well. Find the right deal, which is important. But competition for those deals will be there as well.
I mean, that's interesting. There's a lot of views, obviously, around the future of office and how that is. I'm just wondering, and this is for anybody really, just in terms of what's your perception of that? Are there concerns, Rogier, in terms of offices and lending into them because of the potential future for occupiers? And Jordi, I don't know what you're seeing as well in that sense.
Offices is at the moment one of the most complicated segments in the real estate business. Because the question is really what will happen? What is going to be core? Is that highway or is that a railway location? And another question is co-working a solution for employers, or is it an easy way to save money? That is a question mark. And lenders are generally risk averse at the moment. The combination of a low demand and low yields is, of course, it feels a little bit like a cliff. That makes people nervous, and when people are nervous, they won't step in. And then indeed, there will be headroom for alternative lenders to step in once these assets can't be refinanced in the future. And like many investors, also lenders are looking for safe havens. That can be resi, that can be logistics in the Randstad, especially. When it comes to offices, it's not only a matter of demand, but also supply is an issue, because it is still a challenge to find the cherries that I just mentioned. Maybe Jordi, is that easy for you to find those?
Well, I think the market has shown that investors still have an appetite for core offices. And I think it's safe to say what Dennis already highlighted, that the vacancy rate within the Netherlands and within the bigger cities, and especially within the CBDs of those cities, are low. In some markets like Amsterdam and Utrecht, even below what you can call a sound market. So the markets can deal with this impact. I should add to that the Netherlands was already the front runner in Europe before COVID in terms of working from home. So I think this working from home trend, if it pulls through, will have the least impact on the Dutch market on a relative basis. But we do see definitely that there are some concerns about how in the short term demand will develop and vacancy will develop. But I think you cannot regard the office market as one market, and investors still have a lot of confidence in the Amsterdam market in general, I think. But also in the prime markets of the other big cities as well. But there's really a split, and if you drill that down to deals, you can see that these types of locations, there are still dynamics going on. Transactions are being done, but basically the value add and opportunistic deals, they have dried up, and that is basically because of reassessment of risk by investors, but also by lenders. And lending has, in some segments of the market, has dried up, have become way more expensive than before, which basically triggers a different pricing from buyers, and therefore sellers are not sellers at that pricing. So yeah, and then the trend of co-working. I think at this moment we see that occupiers are still assessing what the impact will be going forward. They are not making decisions in general, but postponing decisions. And obviously, co-working and flexibility is an easy way of postponing a decision. So that's really that market from an occupational point of view is really thriving. At the same end, we see that investors and also lenders are struggling with co-working concept as a tenant in their properties. So that's basically a split that we see in the market.
Okay, good. Claudia, I wanted to pick up with you just on one of the sort of bigger trends that we're seeing more generally, which is the increase, and it was mentioned earlier a little bit, that increased focus post-pandemic on wellness, on ESG, circularity, those kinds of things. And certainly that aspect has been driven a lot, I think, in the Dutch market. So whereas before, after the GFC, there was a kind of, I suppose, a drop at that point in the sort of green sustainability side. This seems to be, many things are being accelerated, and this seems to be one of them, Claudia. What's your sense of that? What are you seeing yourself in the market and also from your members?
I think it's a very good thing that sustainability is much more in the minds and also in the hearts of the people who are working in real estate. And that was actually the biggest goal to achieve, to get it in the focus. We have to do this together, and we have been trying to do so by working together with all kind of Dutch parties who are doing so, like Madaster and Cirkelstad and Dutch Green Building Council, all these organizations who are working effectively to get the sustainability on the agenda and to get it working, to get it done, because that's actually we all thought, because we're not traveling as much, we're not driving our cars this much, and we are not flying that much, that the CO2 footprint would increase. Actually, we still have a lot of work to do. And beside that, beside the sustainability, we have seen another trend, which is very much on top of mind, and that's the senior housing. A good thing is, I saw this morning on LinkedIn that they're actually combining the two, because among the many lessons that COVID-19 drove us, and no one can predict what the future holds, but we have to do it ourselves. We have to do it by working together. And as the senior living industry battles the latest wave of infection and starts to beat back the pandemic through vaccination, it's almost more important than ever to look ahead and try to identify what trends will help hinder our compliant efforts to recover. And sustainability and senior housing are at our foundation are at the top of mind in this year, because besides the residential organizations and the residential industry, senior housing alongside with sustainability will be actually number one on the list to work on, and to get it in progress, because that's very much needed.
Dennis, there's questions coming in. Thanks very much for that, Marcia. Good to see you this morning. Dutch student housing, senior housing, which Claudia just mentioned there. How do you see the prospects for those in 2021? And feel free, anybody else, to come in on that as well. But it's interesting because certainly at the Senior Housing and Healthcare Association, there's a lot of focus on impact investment, and we're seeing that more from a lot of the pension funds and capital. So does that mean things like student housing, senior housing, healthcare, do you think are going to move up, I suppose, the list of sectors that people are looking to invest in, Dennis?
I think that will definitely be the case. As you already say, like impact investing and investing from out the ESG principles is very high on the Dutch investor agenda, and very much aligned with what the pension funds are doing. So in the bed sheds, I will also include the mats here then as well, because that's where we see some interest for investors as well. But student housing, senior housing will attract investors' interest over the next years. I will definitely think that, and that's also because all the trends that we've seen from the niche sectors that are attracting more capital and becoming more and more mainstream is what we see. And I would say that senior housing and student housing will become part of that as well. And there's of course always this yield differential with these sectors, which will attract investors as well. So in a nutshell, yes, I think that these one will keep attracting interest from investors going forward.
Okay, good. Rocky, in terms of the financing side of that, how do you deal with those sorts of niche areas? Because obviously, we've had, for example, 2 sessions in the last 6 months on life sciences and science parks, which we wouldn't have had before, but also that focus on healthcare and those kinds of things. Does that also fit in with the kind of green financing idea, or how do you put that in place, Rocky?
I see green financing more as a general topic. The niches that you mentioned are a bit different. We went along with student housing and science park. Nevertheless, when it comes to student housing and senior housing, what we are looking for are houses which offer alternative possibilities. So both student housing and elderly housing are basically meant for small households on attractive locations. And ideally, a student house is a house which can also be used for a senior to live in. Because if a senior housing goes more in the direction of healthcare, then we are getting into a zone which is more sensitive for legal changes. So what we, for example, like is houses with healthcare. But healthcare with houses is much more complicated, because there it is difficult to predict what the future value is going to be. What we have seen when it comes to science park is that they have definitely come in demand in the last years, and we are still interested in that. Rent values of laboratories are good. There are quite a few professional parties dealing with that. Also, institutional investors stepped into the market. So that is a very interesting one. One remark on student housing, what the impact of the current pandemic is on international students. It's probably short term, but we've also seen quite a lot of investments on the markets which in the past showed a lack of supply, like Utrecht and Amsterdam, actually over the past decade. So I'm dying to see the first numbers actually about the balance between supply and demand for student housing in the 4 biggest cities in the Netherlands in the coming 12 months. So I hope that someone is going to prepare those.
Jordi or Savil's going to prepare those for Rokia?
Yeah, we have an annual report on student housing, so it's probably something that will be part of that. Yeah, definitely.
Jeroen, I wanted to drill down a little bit in terms of the logistics side, particularly looking at the Netherlands. Where are you seeing the opportunities? What are the challenges? Is it in larger box? Is it in more kind of urban, last mile delivery? Where are you seeing the market?
To first address the challenges, I think it was Jordi who published a piece October last year, stating that Dutch logistics stock would still double by 2050. If he's even half right, then we have a serious urban planning issue. Because, as I mentioned, I mean, there was still availability in the Netherlands, and we've also managed to grab a part of that. But going forward, the biggest challenge is to unlock land still. There's more and more difficulty to find those kind of opportunities. Where we do see the opportunity is in brownfield. So buying up all the sites, but then the complexity of that becomes larger as well. And that actually ties in very nice to the sustainability story we were just talking about, because then all of a sudden you need to deal with issues, environmental issues, but also ecological issues. We've bought sites this year where we have to deal with bats and mitigating these kind of things. So all of these tie in together, and that's a huge challenge. I think from the demand side, as I mentioned in my earlier statement, that's clear where it's going, where it's heading. And I think Jordi even, maybe he can elaborate on that as well, that he described that it's possible and that there's plenty of opportunity still out there. It's just about bringing about supply. And that's what we focus on, to set up our team as strongly as possible to cope with these challenges, to be able to do these difficult redevelopments, to deal with all these difficult topics, because that's what you need to do. moving forward.
Okay, good. Jordi, did you want to pick that up?
Well, first of all, I think that was my colleague that's also called Jordi within the research department.
Sorry, yeah.
So, but that's right. I think what's also interesting in the logistics market is indeed what you're saying, is that the availability of land is becoming more scarce, mainly due to also PFAS and PFAS discussions that basically limits the amount of land that is suitable for development or logistics development. Therefore, we also do see a trend of basically going from greenfield to brownfield. Having said that, this trend will have an impact and will accelerate the expected rental growths that we will see in the logistics market. So it's becoming more difficult, but it also comes with different opportunities.
Okay, good. I wanted to drill down a little bit also into the retail sector. You know, obviously trends that have been moving for a little while into retail, have been negative for a while. There's been a lot of discussions about the death of retail. And interestingly, suddenly food retail has become something that's exciting when everybody used to think that was really dull. So how are we seeing that? I mean, are we really going to see a complete shift towards e-commerce for the benefit of your own? What's our sense of that?
Have you ever walked into a Dutch on a sunny day in the last weeks or months? The moment people can go outside, they go into the cities these days, and to do whatever, to meet people, to have a cup of coffee or eat something, even though they are probably not so hungry. So I believe that the cities are there to stay. The Netherlands is fortunate enough to have some nice historical cities, and so the retail market is not that much driven by larger shopping centers, which, well, you might not go to that often in case, well, just for the purpose of being there. A retail location has to be a place where you have to be or where you want to be. And on the places where you want to be, retail will definitely stay.
Okay, good. And Jordi, I wanted to pick up one thing with you as well. Feel free to come in on the retail side of it. But are you seeing any movement in terms of, everybody working from home or a large number of people having to work from home? Is that creating interest in either different cities or different locations within the cities? What's happening on that more granular level with I suppose, what the occupiers are looking for?
First of all, coming back to the retail, I tend to agree with Rogier. The Dutch retail landscape is very well organized. I think there will be demand for the high streets, though the pressure is off on the rents, and maybe the total area will shrink a bit. But there's definitely a future for those streets, and that is quite bright. And obviously, the good thing of the Dutch retail landscape is that maybe a bit of the oversupply that's there is on a very good location and not in an out-of-town mall. Coming back to the office market, I think it's safe to say that what I already told is that we see that occupiers are basically postponing on decisions with regards to their offices. So in that respect, curious to see where it will head to. Our expectation is that basically, again, it will accelerate the trend of having offices in attractive locations with a lot of amenities. We already saw the trend of the office becoming like a place where you meet and not work. That trend will also be accelerated. I do not see that COVID will bring us back to basically motorway locations. I still believe that the offices are places to meet. You should have various ways to come to the office, but once you're in the office, you want to combine working maybe with going to a restaurant or a bar, or doing some groceries. So I think we will see that the trends that were already ongoing in the office market will be accelerated post-COVID, and that's also basically what investors are thinking if you look at the deals that actually took place last year.
And Dennis, in terms of hotels, obviously very attractive in terms of a destination for tourists, but as well a big business hub. Netherlands, the key cities there. How are you seeing the hotels market? Is that an area where you think there may be some of this debt financing gap, where there may be issues coming up, and therefore potentially an opportunity for a more opportunistic buyer to come in with a longer term view of 2 to 5 years?
From a research and strategy perspective, we have not looked that in depth into the hotel markets, but based on the data that I have seen, and coming back to this like debt funding gap, which we've not done for the Netherlands because of a lack of data, which was done for the UK and for Germany, it is one of those sectors where you will see refinancing issues occurring over the next like 12 to 18 months, I will envision. And if there are opportunities at the right price, it might be attractive, but there's a lot of risk that comes with that. And I would say if you can stomach the risks associated with it, it might be a good opportunistic opportunity that you can take on as an investor. But maybe Rogier has something on that from like the debt perspective. But for me in the Netherlands, I have not looked into that much depth into the hotel market.
It'd be interesting to see, Rogier, actually your view on, because there's obviously money being raised for distress and those opportunistic funds. Is that an area where, are you seeing issues, do you think, in terms of companies' ability to be able to finance, and therefore potentially opportunities coming up for those sort of more opportunistic investors?
It looks like it, yes. As I said, we are cherry picking. I mean, apart from the RISI market, we are looking for the better investments, and that could theoretically even be a hotel, as long as we believe in the future of that hotel, and it can also not be too many. And I think most lenders behave that. So for super safe, risk-averse core products, there's more than enough cheap capital available. When it becomes more complicated, it will also be more complicated to refinance those assets. That's definitely the case. In fact, at the moment, you can already see that in the market for development loans. I think most lenders, especially Dutch lenders and ourselves, are capable of providing such loans, but they are becoming scarce. This is also the reason why we see more sales based on forward funding of these developments, both in the RISI and the logistic markets. And in fact, forward funding is already a kind of alternative lending. And that is a clear sign in the market. So it will be more diverse again. It's perhaps a bit comparable to the global financial crisis, where we also saw, like today, more distressed portfolio sales, and that is also picking up again. So we will see some of these signals again.
Okay, good. And Jeroen, just quickly for you. Questions around the e-commerce side. Obviously, you mentioned that as a big driver, and we've seen that across Europe. But do you expect that to retrench a little bit once, as Rogier says, everybody can go out and begin, shopping again, particularly food shopping and those kinds of things? Do you see that e-commerce side falling back a little bit, so that some of the growth that it's made will actually come back again?
No, I would actually expect the opposite. In the end, I mean, it was a trend that was already there before COVID. And as I said, so maybe there were some late adopters, still people that bought their groceries more traditionally. And obviously that will stay a big part of the market. I mean, that's true. But after all, consumer levels are still increasing. People have more to spend. I mean, I think there's also statistics going around how savings are going up incredibly. So everybody's just, because we can't go on a expensive trips, skiing or anything. So everybody's just piling up their savings, and there's going to be a huge increase in spending once we've cleared out of this a bit. So after all, the total volume is still increasing. So part of it will go back to traditional retail, but e-commerce is here now to stay and grow further. There's no doubt about it from my side.
Yeah, it's interesting to see. I mean, I noticed also that Amazon have just launched Amazon.pl for the Polish market, whereas before that was served out of Germany. So it is interesting to see how that moves. Now, we've got only a few minutes left, so if anybody's got any questions, now is the time to ask them. I've got a couple of things that I just wanted to pick up from all of you, your views on this. So one of them is kind of what you see as the biggest trend for 2021, and also what you see as I suppose the biggest opportunity. Let's start with the trends first of all. Let's start with you, Rogier. Biggest trend from your point of view for 2021 that we'll see?
Well, first of all, the one I mentioned, we will see more legal requirements for sustainability, green buildings. Secondly, there will be opportunities for opportunistic buyers in the retail and leisure sector, especially when it comes to hotels. For more conservative buyers and lenders, by the way, we will focus on the residential market, not just in the bigger cities, but also outside the Randstad in those areas where the population and number of households is still stable or growing. And the trend of urbanization has come to a certain standstill at the moment. But on the long term, this is one that is also there to stay. So the Netherlands offers quite a number of attractive cities, and these will remain attractive.
Okay, good. Claudia, what do you see as the trends? And I'll feed these into the session this afternoon as well.
Well, especially the focus will be on housing production. We almost need 1 million houses in the Netherlands. So that will be on top of mind of everybody, together with sustainability and a focus on senior housing. And if we can bring that together and get the focus on that together with the investors and the people who are working with it, we get a more broader view from what's going to happen and how we are going to put this into the future of the Netherlands, especially in the real estate, because in the near future, this will be what we're working on.
Okay, super. Jordi.
I tend to agree with Rogier about the opportunity that's there in retail leisure, but I also want to add later in the year, I think if you see the yield gap that is there between prime and secondary offices, I think at a certain point value add strategies for offices will become very much relevant as well. And I think the trend, there are various trends in each and every sector, but I think it's safe to say that this year, 2021, will be again the year in which we see that there will be a huge demand for residential and logistics. I think that it's very high on the agenda. Resi will remain the biggest sector, and logistics might even expand a bit further.
Jeroen, what are your biggest trends?
From the demand side, it's clear the trajectory we're already on, as I stated earlier. And challenges are definitely in finding the land, unlocking land, and having to deal with everything that comes with that, urban planning, environmental issues, ecological issues. But if you did able to cope with it, it also provides great opportunity, and that's what we've seen recently. That this brings about a whole new angle in our sector. That more than before, where it was just about municipalities giving out new green fields. Now we really have to go to more challenging locations, but also unlocking greater opportunity, in my opinion.
Okay, great. And since the question has just come in, which is, thank you, Kathleen, for that, by the way. Sneaking in just under the wire, many UK SMEs are having problems exporting into the EU. is the Netherlands seeing an increase in warehousing with distribution opcos to take advantage of this situation?
No, definitely. I mean, we see, so as I mentioned before, it's a trend that's already going on for 2 years now. But still, some have been caught off guard, I guess, by still underestimating the real impact of this. I think everybody thought, well, business will go on as usual, and maybe there will be a bit more of administration. But now that's actually a fact. People realize how easy things were, and that's now really coming about. And you also see that in the demands that we're in the inquiries that we're getting from occupiers, UK based, but also internationally. I mean, Asian firms that are now splitting their footprint into two, one in the UK and one on the continent.
Okay, so there really is, you're expecting to see quite big growth by the sounds of it in that, Jeroen.
We already see an increase in demand from that. So and it's different trends, as I just mentioned, piling together. So it's the trend of going from just in time to more stock because of you don't want to run out when all of a sudden there's a glitch in the supply chain. E-commerce and then now Brexit. I mean, I think overall it's a pity. I mean, I think we were overall we were better off before, but at this very moment, we do see that Brexit is causing companies to look to have two footholds.
Last for you, Dennis, just in terms of the, I suppose, key trends and opportunities.
Let's first start with the opportunities, and I think many of them have already been named. But let me go across the risk spectrum. I think in the core sphere, it's really like residential and probably like CBD offices, and then you have, of course, logistics and light industrial, which is for AW also a very important sector for us, and I think there will be lots of opportunities there as well. And if we then go a little bit further, I agree with Jordi that yield spread between prime and secondary offices probably will give quite good value add opportunities, and then aligned with Rogier in the opportunistics sphere, like it's more the distressed sales that might give some opportunities to investors to go in the market. So that's across the risk spectrum. And I think the trends, and we've not mentioned the word yet in the call today, I think climate change awareness in investment decision making, I think is a trend that we will see increasing this year, but also beyond that. Think about like how are we thinking about transitional climate risk and physical climate risk? How can we quantify these risks and take into account into our investment decision making going forward, together with all the trends that have already been named? I think, and I'm with that on Jeroen, that the e-commerce trend, of course, has been accelerated by COVID. We might see a little blip in 2021, but the long-term trajectory for e-commerce is, I think, also an upward trend going forward. So that's from my side. And if I may give a little bit of a risk, I would say if I look at the risk from a macroeconomic perspective, it's inflationary pressure. Because if inflation will go up, eventually bond yields have to move up as well, which is of course kind of the risk for the real estate sector. But right now, looking at 5-year forward inflation expectations, we don't see signals yet that we are going into an inflationary environment. So that is quite muted, and that's also why we think lower for longer bond yields is our main case, our base case at the moment. Thanks
very much to all of the speakers. Thank you for sharing your insights, and look forward to seeing everybody at the next session. So thank you very much. Enjoyed it a great deal. Thank you.